Hi, I'm Eskay, your friend and guide to financial freedom. Today, I'm sharing 5 essential rules for long term wealth creation. These are simple principles to help you manage your money and invest with true discipline. Let's begin. Rule number 1: start early and consider the 70-30 approach. This is a highly effective framework for any investor. Instead of spending everything you earn, aim to live on 70% and direct 30% toward investing. This simple habit creates room for wealth building from the very beginning. When you direct these funds into equities or mutual funds early on, you allow the power of compounding to work its magic. Over decades, even small consistent amounts can grow into a significant corpus. Don't wait to see what's left at the end of the month. Create room for wealth building from the beginning. Remember, the habit of starting early and staying invested is often more important than the exact percentage you start with. Let time be your greatest ally. Rule number 2: stay consistent and always pay yourself first. Reverse that process. Allocate money to your goals as soon as your salary arrives. This turns investing into a non negotiable habit. Then, and only then, manage your lifestyle with what remains. This simple shift turns investing from an occasional decision into a non negotiable habit. Consistency is what separates successful investors from those who are constantly waiting for the right time. Stay disciplined. Rule number 3 is the foundation of risk management: diversify. It's an old saying for a reason: don't put all your eggs in one basket. Diversification doesn't mean owning dozens of random stocks, it means avoiding unnecessary concentration. If your entire financial future depends on just one company or one sector, a single market correction can be devastating to your plans. Spread risk across asset classes like equities, gold, and fixed income. Your allocation should match your age and tolerance for risk to keep you in the game long term. Rule number 4: control your emotions while making financial decisions. Believe it or not, the biggest risk to your portfolio isn't the market, it's your own behavior. When markets are booming, greed and FOMO can lead you to chase returns at the peak. When they fall, fear can push you to panic sell at the bottom. Successful investing requires strategy over emotion. Decisions should be based on your research and your long term plan, not on today's excitement or tomorrow's fear. Plan over panic. Rule 5: think long term and don't just focus on today. Short term markets are always going to be noisy. Headlines change every single day, driven by global events and economic data. But as an investor, you must learn to ignore the daily noise and stay focused on the broader horizon. Buying shares is buying ownership in real businesses. Focus on earnings, competitive advantages, and value creation over decades, not days. Patience is your most powerful tool. To recap, start early with a plan, stay consistent, diversify your assets, control your emotional reactions, and always think long term. These 5 principles are your roadmap to building sustainable wealth and financial freedom. For a disciplined approach, subscribe to Eskay Investments. Link below for a confidential consultation. Invest wisely, stay disciplined, and keep thinking long term. I'm SK. See you next time.